Good morning, ladies and gentlemen. Welcome to the 12th General Meeting of UAP Holdings PLC. My name is Vincent Ragwe, and it is an honor to chair this meeting on behalf of our Group Chairman, Dr. J.B. Wanjui, who would have loved to be here but due to unavoidable circumstances could not attend. I hope you're keeping well and staying safe despite the challenging circumstances we are currently facing. In view of the declaration of COVID-19 pandemic early in the year, the government of Kenya announced and imposed stringent measures to curb the spread of the virus. These included public health guidelines prohibiting public and social gatherings, restrictions on movement into and out of certain counties and areas, and a nationwide curfew. The impact of these measures was that we could not hold a physical annual general meeting as stipulated in the company's Articles of Association. During this period, as such, we sought and have received a no objection from the Capital Markets Authority, pursuant to the High Court ruling in miscellaneous application number E680 of 2020 under the provisions of Section 280 of the Companies Act, allowing public companies to hold their annual general meetings by electronic means. I now take this opportunity to introduce to you those with me on this live stream. The Board of Directors of the company who are online, the Group CEO, Mr. Arthur Oginga, the Group Company Secretary, Mr. Kirote Njiru, Mr. Alexander Mbai, Audit Partner at KPMG Kenya, who are our external auditors, and Ms. Doreen Onwonga, a partner from the law firm of KN Law LLP, who carried out the legal compliance audit. Ladies and gentlemen, the notice convening this meeting was published in the daily newspapers of nationwide circulation on 3rd June 2020. Further, the notice was uploaded on the company's website and a reminder sent via SMS and email to the shareholders who have provided their up-to-date correspondence details. Copies of the annual report were also uploaded on the website, and I invite the company's secretary to read the notice convening the meeting and to confirm that the meeting is appropriately constituted.
Thank you, Chairman. Notice is hereby given that the 12th Annual General Meeting of the shareholders of UAP Holdings PLC will be held on Thursday, 25th June 2020 at 11 a.m. via electronic communication platforms, and business as set out in the public notice issued on 3rd June 2020 shall be conducted. Chairman, I confirm that at the commencement of the meeting, a total number of 13 shareholders are present, representing 87.5% of the shareholding of the company. They are registered and participating in the virtual annual general meeting. I therefore confirm that the meeting is properly constituted.
Thank you. Having confirmed that we have a quorum, I declare that the meeting is properly constituted and convened. Dear shareholders, the minutes of the 11th Annual General Meeting held on 14th June 2019 have been uploaded on the website. I would recommend that we take these minutes as read. Shareholders, the financial statements for the year ended 31st December 2019 were made available to all shareholders through a publication in the local dailies and also published on the company's website. The chairman's report for the year ended 31st December 2019 is as contained on the annual report from page 34 to 37 and shall be taken as read, and I would wish to make the following additional remarks. Shareholders, since the last meeting, there has been a leadership transition in the business following the resignation of Mr. Peter Mwangi as the Group Chief Executive Officer, effective 14th April 2020, to pursue opportunities in the next phase of his career. We wish him well and thank him for his wise leadership and counsel during the growth phase of the group's operations in East Africa, including the integration of Faulu and the Old Mutual Kenya and UAP business. Mr. Arthur Oginga took over as the Group Chief Executive Officer on 15th April 2020 through robust succession planning, and the board is confident that Arthur shall steer the business in the right direction. The notice of this change was published on the local dailies on 14th April 2020, as set out in the chairman's statement. 2019 was a challenging in many respects, and I'm confident that our business has emerged more resilient, with our core business performing better than the prior year due to the persistent efforts by management to improve operational efficiencies and customer service. However, these positive results were dampened by the impact of subdued property markets in Kenya, Uganda, and South Sudan, which led to significant fair value write-downs on some of the properties in these markets. Our Group Chief Executive Officer, Arthur, will speak on the economic impact in Kenya, Uganda, and Tanzania and Rwanda. However, in South Sudan, the operating environment remained challenging due to the political standoff between the two main factions. We are, however, cautiously optimistic that with the signing of the peace agreement and the formation of the transitional agreement earlier this year, the focus can shift to the economy and uplifting the lives of the citizens. Dear shareholders, as you may have noted in the recordings you viewed prior to the commencement of the AGM, the majority shareholder in this business, Old Mutual, has marked an incredible milestone this past month as it turned 175 years, while the UAP business is also marking 100 years of offering financial security in East Africa. We strongly believe that these achievements demonstrate that we have succeeded in staying relevant to our customers and are responsive to the changing needs. I wish to thank all our shareholders and customers for their continued support and contributions to the success of our business. It is against this background that I now invite the Group CEO, Mr. Arthur Oginga, to present his report as well as the financial statements to you.
Thank you, Chairman. Ladies and gentlemen, a very warm welcome and thank you for attending this AGM. My presentation this morning will focus on the business performance in 2019 within the context of our operating environment. I will also at the end take you through some of our key priorities going forward and our outlook for the 2020 operating environment. Our top 5 focus areas are as highlighted. We will continue to focus on growing our premiums but focusing on profitable growth. Our laser focus on achieving underwriting profits in our core business of insurance remains. The property markets have softened across East Africa, and our focus is on turning around the performance of our property portfolio. We have made progress on a number of fronts, as I will talk to later, but in an increasingly difficult operating environment. Completion of our debt restructure was previously impeded by an encumbrance on the UAP Old Mutual Upper Hill property that we intend to use to secure long-term debt. Judgment was finally issued in our favor in the matter in Q1 of 2020, and we intend to explore all available options to complete the debt restructure. Digitizing the business is a key area of focus, and the COVID-19 pandemic has led to an acceleration of our efforts in this regard. Turning to the operating environment, in 2019, the macros remained positive across our markets. The economies across East Africa continued to achieve relatively good growth rates, led by Rwanda at over 8% to Kenya at just over 5%. Inflation remained within the target ranges, with Kenya closer to the top end of the range, whilst currencies across the region were relatively stable. A lot of this has, of course, changed since the COVID-19 outbreak. The Kenya shilling has depreciated 7%, while the growth outlook is significantly lower. Turning to markets, business confidence was positive, with the Stanbic PMI reflecting positive sentiment. At the tail end of 2018, we saw the equity markets take a dip, but most of 2019 saw a recovery, particularly in Q4, when the interest rate cap was repealed, leading to a better outlook for the banking stocks particularly. The money market generated good returns, reflecting the stable macros alluded to earlier. The story in the property markets was quite different. The Kenya commercial property market continued to experience severe pressure due to the oversupply of office space, and we can see from the graph that Upper Hill, where we have about 50% by value of our property portfolio, has experienced more strain than the other commercial hubs. In South Sudan, we have a beautiful property, first of its kind in the market, but the operating environment since we opened the doors has curtailed growth and hence demand for grade A office space. In Uganda, we are starting to see early signs of pressure on rental yields as well. The COVID-19 outbreak will likely have further negative impact on the property markets. The likely economic downturn, coupled with accelerated work from home initiatives, will likely lead to reduced demand for commercial property, as well as a different type of office design. Let me round off my comments on the operating environment with a few comments on the insurance industry, particularly focusing on the general insurance business in Kenya. As can be seen from the graph, premium growth has been very muted over the last couple of years. At a compounded annual growth rate of about 2%, premiums have not kept pace with inflation, let alone real expansion of the economy. Underwriting margins are at an all-time low, and investment income returns are not what they used to be 5 years ago. Consequently, the returns across the industry have been on a decline. We do not believe that the value of insurable risks are declining. We believe that the lack of top-line growth and the impact on returns is more a function of pricing, and as a business, we will continue with our focus on profitable top-line growth. Underwriting margins will therefore remain a key measure of performance for management. We are also supportive of the cash and carry regulations and will work closely with our banking partners, intermediaries, and customers to ensure a success of it when it is finally implemented. Turning to our results, the group reported a loss before tax of Kenya shillings 3.2 billion. It is a disappointing result overall, but unpacking the results shows that we have made progress in our core business and the choices we have made are paying off. At the core, we are an insurance business and we are making steady progress on that front. Some of the key highlights on the performance are as follows. On pricing and growth, earlier I mentioned the pricing competitive pressure the industry faces, leading to a real decline in premiums. In that context, the board and management resolved a few years ago to only take on properly priced business. This saw premiums decline over the last 3 years. I am glad to say that in 2019, we managed to arrest that declining trend. This is extremely positive as it signals two things. One, our intermediaries are listening to us and agree that competition based on pricing can only be a race to the bottom. And two, customers are prepared to pay for value, and therefore the improvements we are making to our products and service are being appreciated. On fair value losses, this was the driver of the overall performance. I have talked about our property businesses and the downturn in those markets. We have taken a fairly large impairment on our property portfolio. Claims, this is a story of two halves. We have been successful in managing claims on the general insurance business and in particular the motor business. But as I will explain, we were set back by changes to the NHIF scheme in 2019. On interest cost, we began a process of reviewing our borrowings and have achieved some measure of success with a reduction in the effective interest rate on our loans in Kenya and Uganda. We have a strong balance sheet with total assets of over Kenya shillings 56 billion. The year-on-year drop in total assets is due to the impairment of the investment properties. Other investments have grown: equities, money market investments, and cash and near cash instruments. Further, premium debtors have declined, reflecting improvements in cash collection. As mentioned, our core business is insurance. The bar graphs paint the picture of what I had talked talked to earlier about the performance of our core business relative to the property business. These graphs show the profit before tax trend of the business over 3 years. On the extreme left, we have the performance of the core business. In the middle is properties, and on the right is the combined group. On a like-for-like basis, our core businesses reported a profit of Kenya shillings 1.7 billion in 2019, more than doubling PBT over 2018. These improvements have been driven by factors I have previously mentioned. Profitable top-line growth, stringent claims management to arrest fraud, but still meet our claim settlement turnaround times, cost control, faster cash collection, new products, and improved customer service. On the other hand, the property business has reported a loss before tax of Kenya shillings 4.8 billion, out of which Kenya shillings 3.2 billion was net fair value losses on the investment properties. It is therefore important to note that a significant portion of our losses are of a non-cash nature. At the same time, the cash generation of the core business has improved significantly in the year, as reflected in the growth in non-property investments. I will quickly take you through the performance of our main business lines. On the GI business, within the context of the industry operating environment that I pointed out earlier, we are pleased with the progress we have made with the general insurance business. The underwriting margins are back up to a more sustainable level at 3% for the year. This has been off the back of improved claims management, covering both service improvements as well as cost containment. Our parts supply sourcing has in some cases reduced costs by up to 40%, while the use of internal assessment centers has cut down fraud and ensured faster turnaround time for clients. Premium growth was positive in Kenya, but overall negatively impacted by South Sudan and Tanzania. Turning to the health business, the health business is a high volume, low margin business, and our focus has been on ensuring we have a compelling offering, automating processes and working very closely with medical suppliers to reduce the cost of service without compromising on service quality. Some of our offerings have been taken up very positively, like the Go Plus Wellness application, and we saw very positive premium growth in the medical business, as evidenced by the chart at the top. Underwriting profit was, however, impacted by claims. The change in policy by NHIF to discontinue rebates at the higher-end hospitals meant we absorbed more cost without being able to pass it on to our clients. This was a major contributor to the deterioration in the claims ratio from 70% to 74% in 2019. We, however, have been able to contain costs, leading to an improvement in the expense ratio by 200 basis points. Our life businesses in Kenya and Uganda continue to perform well. Gross written premium has continued to grow, and we maintain our market-leading position in Uganda. We are focusing our growth on the corporate segment. We believe that with our reach, not just in East Africa, but across the continent, we provide a compelling proposition to local, regional, and multinational businesses operating out of East Africa. On the property business, our turnaround of the property business has focused on the following: 1, improve occupancy levels; 2, contain costs; and 3, reduce the financing costs. We have done well on these 3 fronts. As can be seen from the slide, rental incomes have continued to improve, driven by increasing occupancy. On cost containment, we have implemented several initiatives, including setting up of our solar power plant in South Sudan to power up the building, which was previously running on diesel generators. We expect to save up to 50% of the current diesel costs, which will not only reduce running costs, but play a positive role towards sustainability of our environment. This is in keeping with our ethos on responsible business. On the financing costs, we have in the interim renegotiated some of our facilities with the lenders to obtain more favorable rates in both Kenya and Uganda. Now that the buildings are substantially let, we are also in discussions with lenders to change the tenor of some of the debt to match the long-term nature of the assets backing the debt. These actions should not only reduce our currency mismatch, but overall lead to a stronger, more resilient balance sheet. However, due to the factors I mentioned before, we have had to consider and take some significant property write-downs to some of our properties in Kenya, mostly those in Upper Hill, South Sudan, and Uganda, as shown in the slide. On occupancy, this slide shows the improvements we have achieved with letting the property portfolio in the newer assets. In Kenya, I am pleased that we are more or less fully let. In South Sudan, under very difficult circumstances, we have managed to get to 70% occupancy. We are more optimistic than we have ever been on South Sudan, given the progress being made in implementing of the peace agreements. Turning to our outlook, in terms of our priorities, over the next year, my key focus areas will be to conclude on the outstanding merger and integration of the group businesses. Importantly, will also be the completion of the debt and property business restructure. On the merger, we have made significant progress in the last couple of months with structuring options, and we will build on that momentum to bring this matter to closure. Throughout, we have kept the regulator updated on the progress, and I would like to acknowledge the support they continue to provide. A key impediment to the debt restructure has been a matter pending in the High Court, which led to an encumbrance on the land on which UAP Old Mutual Tower sits. I'm pleased that the courts have ruled on the matter in our favor. We are now in active negotiations with banks to restructure the debt. As you are aware, a significant portion of the debt was procured for the property development, and part of the restructure will involve a review of how we organize our property portfolio. The objective of both exercises being to ensure that we achieve optimal returns on the capital tied in the property business. In mid-March 2020, we reported our first case on COVID-19 in the region. We acknowledge the efforts that the governments have taken to flatten the curve. As a responsible business and partner in the community, UAP Old Mutual has taken steps to play its rightful part. Immediately after the first COVID-19 case was announced, we took immediate action to ensure the safety of our staff, clients, tenants, and intermediary partners, while ensuring that the business continues to operate normally. The vast majority of our staff now work from home, while we have taken measures to ensure that those who work from our offices, together with tenants and visitors to our buildings, do so in a safe environment. We have also fast-tracked the deployment of digital solutions and cashless payment options that ensure customers and intermediaries can interact and transact with us without the need to physically come to the office. On the community front, UAP Old Mutual across East Africa has played a role in supporting communities and governments. Through our foundation, we have contributed personal protective equipment to Gertrude's Children's Hospital in support of a testing program under their community outreach project. We have made direct cash contributions to particularly vulnerable members of the society to ensure they have access to food and other basic necessities. To reduce the spread of the virus through public transport, we donated masks to our clients in the public transport industry. We also donated over 100 beds to public hospitals in Uganda. With the support of the Insurance Regulatory Authority, we are also exploring suitable interventions in partnership with government to support healthcare workers in Kenya. We have set aside insurance cover to the tune of Kenya shillings 180 million towards this initiative. The COVID-19 pandemic is likely to have far-reaching effects on not just our economies, but globally. We expect that all our markets will be impacted, and it will be a case of how deep rather than whether there will be an impact. The recovery timeline will be dependent on the depth of the downturn and the effectiveness of the actions taken by government to stabilize and stimulate the economies. The movement restrictions placed by governments across the region have had an impact on the level of economic activity. Due to the length of these restrictions, we believe that recovery will take a while. In terms of our business, we expect the following impacts. The inability of our sales force to meet with customers and potential customers has slowed down sales, particularly on the retail side. Our investments in the stock market have experienced unrealized losses in line with the drops in the benchmark indices, especially on the Nairobi Securities Exchange. Whilst we have seen a little recovery in Q2, the markets have not fully reversed the 2020 losses. We have already seen strain with some of our tenants, and we expect that some will seek rental holidays or exit some properties. This may lead to further investment property valuation write-downs and reduced occupancy levels. We have also seen some sectors of the economy facing severe strain and declaring staff redundant. We expect secondary effects to transmit further into the economy, leading to more redundancies. This will impact our funds under management as we expect early withdrawals as a consequence. On a positive note, however, we have also experienced fewer and reduced severity of claims in Q2, which we expect to partially offset the above impacts. The board and management will continue to proactively monitor the situation. We have developed scenarios and action plans and will ensure that we are alive to the opportunities that the new normal will present. In closing, I'd like to thank you for your attendance and continued support. Thank you, Chair.
Thank you, Arthur, for that detailed presentation. I now call upon Mr. Alexander Mbai, the auditor's representative, to read their opinion.
Thank you, Chairman. I will read the auditor's report, and it is on pages 81 to 86 of the financial statements. And I'll start. We have audited the consolidated and separate financial statements of UAP Holdings PLC, formerly UAP Holdings Limited, set out on pages 87 to 185, which comprise the consolidated and company statements of financial position at 31 December 2019, and the consolidated and company statements of profit or loss, statements of other comprehensive income, statements of changes in equity, and statements of cash flows for the year then ended, and notes to the financial statements, including a summary of significant accounting policies and other explanatory information. In our opinion, the accompanying consolidated and separate financial statements give a true and fair view of the consolidated and separate financial position of UAP Holdings PLC, formerly UAP Holdings Limited, as at 31 December 2019, and of its consolidated and separate financial performance and its consolidated and separate cash flows for the year then ended, in accordance with the International Financial Reporting Standards, IFRSs, and the Kenyan Companies Act 2015. Report on other legal and regulatory requirements. As required by the Kenyan Companies Act 2015, we report to you based on our audit that, in our opinion, the information in the Director's report on pages 73 to 75 is consistent with the consolidated and separate financial statements, and our report on the consolidated and separate financial statements is unqualified. I will just briefly go through the other highlights of our report. That basis of our opinion, we conducted our audit in accordance with the international standards on auditing. And then our report also contains the key audit matters. These are the matters that, in our professional judgment, were of most significance in our audit of the consolidated and separate financial statements of the current period. These are contained on pages 81 to 84 of our report. And finally, I will just state other information that is in the financial statements, and I will not go to the details of that. The remaining part of our report is the responsibilities of the directors and ourselves as the auditors for the audit of the financial statements. So, Chairman, thank you. That is our audit report.
Thank you, KPMG, represented by Alex, who was the audit partner. I now call upon Ms. Doreen Onwonga, a partner at KN Law, to read their legal and compliance audit opinion.
Thank you, Chairman. Our opinion is contained on page 54 of the annual report. The Capital Markets Authority's Code of Corporate Governance for Issuers of Securities to the Public, 2015, requires the board of a listed company to ensure that, one, an internal legal and compliance audit is carried out on an annual basis, with the objective of establishing the level of adherence to applicable laws, regulations, and standards. Secondly, a comprehensive independent legal audit is carried out at least once every 2 years by a legal professional in good standing with the Law Society of Kenya. And the findings from the audits are acted upon, and any non-compliance issues arising corrected as necessary. It is on this basis that the Board of Directors of the company, UAP Holdings PLC, commissioned a legal and compliance audit with the aim of assessing the levels of compliance with the company's laws, regulations, and standards applicable to it. Our responsibility is to express an opinion on the level of compliance with laws, regulations, and standards applicable to the company. We conducted an on-site legal and compliance audit and prepared the following: a compliance matrices identifying the company's compliance obligations arising under the applicable laws, regulations, and standards, and information request lists detailing the documents, information, or confirmations required from the company to assess the adherence to the compliance obligations. In our opinion, there are no material incidences of non-compliance by the company with the laws, regulations, and standards applicable to them. And in this regard, we issue an unqualified opinion.
Thank you, Doreen. Shareholders, as you are all aware, an opportunity was provided for you to ask questions and seek clarification regarding the financial statements and resolutions being presented. We shall take a few questions from the members who can post these on the question tab, either through the web-based platform or following the prompts on your mobile phone. Owing to time constraints, we may not be in a position to respond to all of the questions, but please note that all questions received shall be compiled and responses provided on the website. We have received a question from one of our shareholders, Mr. Jeffrey Masharia. His question is, when do you intend to list the UAP shares? May I request our Group CEO, Arthur, to answer that question?
Thank you, Chair. The UAP All Mutual Group remains committed to listing, having made a commitment to the regulator to list within 18 months after the close of the original acquisition transaction, which was subject to favorable market conditions. This is currently not the case. The situation with COVID-19 remains a concern, and we anticipate a listing within the next 36 months. In the meantime, UAP Holdings shares continue to trade over the counter.
Thank you, Arthur. Ladies and gentlemen, I trust that we have now given adequate consideration to all the matters contained in the annual report. Shareholders, the following resolutions shall be passed by a poll, and all shareholders have received SMS and email prompts to cast their vote, and voting closes at 1 p.m. Kenyan time. The instructions on how to cast the poll is available on the company's website. The results of the poll shall be published on the company's website and in the local dailies within 48 hours. I will now invite the company secretary to read the resolutions to be passed.
Thank you, Chairman. The ordinary resolutions to be passed are as follows: to confirm the minutes of the annual general meeting held on 14th June 2019, 2, to receive, consider, and adopt the annual report and audited financial statements for the year ended 31st December 2019, together with the chairman's, directors, and auditors' reports thereon. 3, to note that the directors do not recommend the payment of a dividend in respect of the financial year ended 31st December 2019. 4, to consider and approve the directors' remuneration report for the year ended 31 December 2019 as provided in the financial statements, and to authorize the board to fix the remuneration of the directors for the current year. 5, to approve that the following directors who retire by rotation be re-elected and appointed as directors of the company in accordance with the company's Articles of Association. Ms. Susan Omanga, Mr. Robert Mbugua, Mr. George Minor. To approve the appointment of the following directors who are appointed to fill casual vacancies in accordance with Article 116 of the Articles of Association of the company: Mr. Richard Trigas, Mr. Shailesh Devchand, Mr. Clement Chinaka, and Ms. Maria Shipiri. 7, to approve that the following directors, being members of the Board Audit Committee, be elected to continue to serve as members of the committee: Mr. Robert Mbugua as the chairman, Mr. Vincent Ragwe, Ms. Suzanne Omanga, and Mr. George Minor. 8, to note that the auditors, Messrs. KPMG Kenya, being eligible and having expressed their willingness, will continue in office in accordance with Section 721, subsection 2 of the Companies Act 2015, and to authorize the directors to fix their remuneration in accordance with Section 724, subsection 2 of the Companies Act 2015. Chairman, the following special resolution is being presented for adoption, and that is 9, to approve the amendment of Articles 71, 78, and 86 of the amended Articles of Association of the company. Thank you, Chairman. Those are the resolutions to be adopted by the shareholders.
Thank you, Madam Secretary. Shareholders, I take this opportunity to thank you for attending this meeting. I also wish to thank our service provider for providing us with appropriate technology, platforms to support this AGM, and for all the participants who have in one way or another lent their expertise to make this meeting a success. There being no other business of which due notice has been given, I declare the meeting officially closed. God bless you and keep safe.